Welcome to the Daily Brief. This is being prepared Thursday, August 18th, where I'll look at the action in the market today and then see how things look for Friday, August 19th. And I'll end up doing just a daily brief video. My intentions were to do a full-blown video, but ever since Tuesday, the last full-blown video that I did, not really much has changed. So rather than take all the time to do that, as long as we're still below the 200-day moving average, nothing has really changed. We haven't really fallen back, and we're still working off this overbought condition, and we have to a degree, but there's still some indications that we're overbought. But unless we can get above that 200-day moving average, the climate really isn't going to change. We're seeing a real slowdown and a real lack of conviction in the market right now. We're in the middle of August. A lot of people take vacations. Sometimes, unless something big is happening, the markets tend to really slow down during the last week or two of August. And that might be what's happening right now. But at the same time, that can always change. Things can always come to the forefront that the market fixates on and either wants to push it higher or lower. And then everybody has to do things while they're on vacation. But while this is going on, I don't see the need to do a full-blown video. I'm just going to keep doing the daily brief videos. Now, I do plan on preparing a full-blown video over the weekend for Monday's session. So you can look for that, as well as the weekly video and the intermarket analysis video. So let's go back and talk about what happened on Thursday. We ended up being up 0.23%. We were down slightly in Wednesday's session. We were up slightly in Thursday's session. There's just not a lot of conviction right now, and volume still continues to be below average. The technicals are still hanging in there. They're still positive overall. We do have some overbought conditions. Some of the short-term conditions have been working off. Some of the intermediate-term ones are still overbought, but could be working off as well. But we're not seeing a lot of movement either way to really change things all that much. Inflation and interest rates are the big deal right now, and that comes through to growth concerns. Some of the geopolitical concerns that we have, like I keep saying, they're in the background as far as the stock market is concerned. But if something happens, that could change, and all of a sudden the market is fixated on that. We still have earnings coming out, and then the debate going back and forth about the recession. So what are some comments? The session on Thursday was very mixed. You had some up parts, some down parts. It was very slow. It lacked a lot of conviction. The buyers weren't really convicted. The sellers weren't really convicted. So we just kind of bounced around a little bit. And growth still continues to underperform, but our sector rotations, our positive setups, they're still holding up. They're just pausing right now. They haven't shifted or anything like that. If we're seeing a little bit more weakness, it's in the small caps and in the mid caps, where the moving average is still going up in the rotation charts, but we've dropped a little bit below that. But with the S&P, we're still holding up okay. The S&P is still below its 200-day simple moving average after testing it on Tuesday. And we really haven't gone back to make any kind of a test since then. And we haven't really fallen from that point in a big way either. The Dow, the small caps, the mid caps, and the equal weight S&P, they were able to eke out enough gains to get slightly back above their 200-day simple moving average. The Dow never dropped below, so that's positive. Where the small and mid caps, they did drop, but then they were able to get slightly above it, where the NASDAQ and the NASDAQ 100 are still below their 200-day moving average. And that's the real line in the sand right now. As long as we stay below that, the market is considered negative. If we can get above that, close above that, and then stay above that, that would turn everything back more positive. And I just don't know if the market's able to do that right now. It needs more reason to take prices either higher or lower, but that could change at any time. So we have to keep watching. It does look like there's some internal exhaustion that's been continuing and really lazy action. And we're still trying to work off these overbought conditions. The 10 to the 2 and the 10 to the 5, those yield curves still remain inverted. That hasn't changed. We actually ticked down a little bit in our fear and greed index. We're into neutral territory again at 54. Oil was up. Now it's slightly above 90 at 90.11. We had jobless claims come out and they were weaker than expected. So this is still supporting the idea that employment is holding up and that the Fed can still continue to raise interest rates, and that this definition of a recession may be modified because the employment situation is still holding up and looking okay. The Philadelphia Fed index, it improved to 6.2, where they expected it to be down 4.0, where last month it was down 12.3. So we're seeing a bit of a bounce economically, at least in the Philadelphia area. Existing home sales, and this is another area that's been developing some weakness, is real estate. They declined 5.9% on a month over month basis. And this is the sixth straight month in a row that existing home sales have fallen. And then the total sales in July were down 20.2% from a year ago. So we're seeing some weakness coming into the real estate market, and that's been developing for quite a while. We're still in a positive trend. The ADX is still above 20. The green line is still on top, even though it's declining. But I've switched the bias back over to mixed because there's just not a lot of conviction right now. There wasn't any in Thursday's session. And I'm keeping our momentum at mixed also because we're kind of at that tipping point where things are still positive and there's some under the surface strength that we're seeing, but we're not seeing a follow through in price right yet. So this might need to work itself out for a little while before we do get set to go higher, if that ends up being delayed. And so that means that we might go sideways to down for a little bit. All right. So then we had some Fed speak that came out on Thursday. The Minneapolis Fed President Kashkari, who is a voter on the FOMC, says that he does not know if the Fed can bring inflation down without triggering a recession. Now, that's not an awful lot of confidence. This would be a hard landing where the Fed is trying to maintain that balance in between raising interest rates without slowing down the economy too much. If there's some way that they can stop raising interest rates and have economic growth resume, that's what we call a soft landing. But I've never seen one. Other people claim that there was one, I think back in the 90s or something like that. But it's with the economy so complicated and so many variables, it's really hard to make that happen. And then the St. Louis Fed President Bullard, who's also a voter, said that he's leaning towards a 75 basis point hike in September and is not sure if the worst part of inflation has actually passed. So that didn't produce an awful lot of confidence. So we're not really seeing a pivot from these folks. It's Chairperson Powell that's the most important, but we haven't really heard anything. Then there's the Kansas City Fed President, George, good old George. Is that George Washington? I don't know. Said that there's still a significant difference between supply and demand in the economy. Can't they just speak English here? Adding that she is encouraged by the July inflation report, but it's not time for a victory lap. Okay. Yeah. So that's about as non-committal as you can get. So we're not seeing that dovish move, at least yet. All right. So what's our outlook? The technicals, they're still positive. We still have some overbought indications. Some of those have worked off, but we're still below the 200-day simple moving average. Sentiment is back to neutral. We don't have any economic reports coming out on Friday and then August getting before a weekend. Don't be surprised if we see some real slow action and volume really tapers off even more. Now, that could always change. Something could come out that the market needs to react to, and that could really mess things up. But the trend right now has been things are slowing down, and the market is just, if it's getting ready to do anything, it doesn't seem to be ready right now. And then we have the whole list of geopolitical events, with inflation and interest rates being the big concern. That still continues. We'll still keep an eye open for any Fed speak, or if they start to monkey around with any of their policy. But right now it's the same. They're really worried about inflation. They still see a need to keep raising interest rates. So our scenarios, we're not down because our technical analysis indicators are positive, But all of these reasons listed here, with the overhead resistance being the main one, the market's really going to need to have some conviction to get above that and stay above that 200-day moving average. The technicals are still positive, but we might be seeing some internal weakness or just laziness continue. We are going with the up scenario because the technicals are positive, but some of them are overbought. And as I've said now many times, we have overhead resistance. There's still a real disbelief that the market is going to go higher in the second half of 2022. But if it does, that could really bring buyers in from the sidelines because of the fear of missing out, or FOMO. Our scenarios still look okay. The rotation is still looking okay. Our setups are still looking okay. They haven't really improved all that much, but they haven't weakened either. So we're still working off of those signals. The technicals, again, are still positive, and we have the big 200-day moving average above where we're at. We're not sideways right now as long as the ADX is above 20 and the green line is on top, even though it is declining. So our conclusion then is the S&P is positive, but it can be considered overbought with the resistance. Short-term positive with resistance, nothing really matters unless we can get above the 200-day. Long-term, we're still below that moving average. So thank you. I hope this brief video was helpful to you. As I said, I'll try to do a full-blown video over the weekend and a weekly video and the intermarket analysis video. So have a great Friday, and I'll talk to you next time.